Everybody, this is Jim at SP500chart.com. It's 4:21 p.m. here on April 16th, 2013. And we had a nice rebound in the S&P today. So that means I was sort of a little wrong yesterday, but we'll get into that. The good news is nothing actionable took place. So my hunch was wrong, but nothing in the chart led us astray. If that makes sense, I'll go into it in just a bit. I want to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm still not a licensed financial professional, but I am still a guy who draws lines on charts. So let's have at it. So, how was I wrong yesterday? Well, I thought we would probably have a little bit more selling pressure today and take this yellow line out right here. It's going to go eventually. We all know it is. It's just a matter of when. So, thinking it would, and I'll be honest with you, when I made, I really did not put two and two together yesterday with the news cycle, and I just did not realize that when we were dealing with the markets yesterday, how much additional selling pressure might have been associated with the bombing at the Boston Marathon. So, maybe if I had realized that, I would have thought, well, this is just a little news-induced additional selling pressure. I might have been a little bit more inclined to think this line would produce a bounce, because as you know, we closed right on this rising support line. And guys, I think this line's going to go. I think it's going to go. And I think it's probably going to be yet another sell in May and go away. I really do. Everything seems to be pointing in that direction. And if you can look at this chart that we're seeing right here, this 2-hour chart, and you can see that whereas we were just, tooling nicely between this line, this top line, and this bottom line, see, come up here, come back down, come up here, come back down. This time, we could not reach that line. Then we came back down to the yellow line. This time, we couldn't even reach an altered. We couldn't back test this line. We'll take a closer look at that. But suffice it to say, same thing. Until this line breaks, I'd stand pat. We're coming up to a line that should be of significant technical resistance, and it will wait to be seen if the S&P will have the strength to overcome this all-time highs trend line. Now you say all-time highs trend line. We are now up in all-time high territory. This is true, but this line is drawn over. Got to go to a 9-day. This line is drawn over the tops of 2000, 2007, and that is what we are approaching right now. And so, to what degree would one expect this line to be overcome? Well, the headline writers are all, out in talking about how great the markets are doing and how we're at these all-time high levels, etc., etc. By the way, I just noticed something kind of interesting. I'd never noticed this before. We have this little, and I don't know that this is going to pan out pan out this time as it has before. But this line right here actually is kind of an extended neckline from the topping pattern of 2000 and the topping pattern of 2007. So that would almost seem to say to us here that if we break 1400 at some point, it's quite likely the party's over. Or as Don Meredith would have said on Monday Night Football, turn out the lights. The party's over. Now, obviously, we are well above this line, but we are very close to this top line. And here's the other thing that I hadn't really noticed. If we go back to the bottom of 2002 and 2003 and look at the breakout territory there and extend that, we end up with an almost horizontal line again that describes our neckline of the big inverted head and shoulders pattern that we broke out of in 2009. I'd not noticed that before. So it's almost like the market for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 and a half years, the past two times it's gotten between these two areas, it's formed a top, and whenever it's gotten below this line, it's formed a bottom. That may be worth knowing in 2016. But anyway, let's bring it a little bit more up to date. Looking here at a 10-minute chart, I've got to readjust this line now. This is where this yellow line should be. We dipped just ever so slightly below it yesterday. Clearly not enough, though, to consider it of any technical importance whatsoever. Today, as the market bounced off this line, I threw this little gray line up here, which really kind of, I believe, served as a signal that the S&P was making a legitimate bounce. If we draw a little line right here, we can color that purple. And you know why? Because here on the 5-minute chart we see a small little inverted head and shoulders pattern. And as we've seen before, whenever you break a descending support line to the downside, it's no problem for the market to get back into that channel. As a matter of fact, the last time we saw that happen was back here in early April, when we were in a descending channel that broke to the downside, and that actually set up the reversal. And conversely, we were in an ascending channel that broke to the upside, and same rule applies. It's no problem when a rising resistance line gets taken out. It's no problem for the price action to bring it back into that channel. So I know I keep saying that over and over and over again, but it's still true. So why do I say that I think that we're starting to see signs of weakness? Well, let me go to, I think maybe a 30-minute chart will show this the best. Nope, going to go to an hour. At one point, this was our resistance line. Okay? And we started getting closer and closer down to the bottom of this support line. Finally broke it. Then this line became our resistance. It came up, could not get back in the channel, went sideways for a while. And that is now should be considered very, very strong resistance. Matter of fact, I think there's probably a very, very high likelihood that this line never gets tagged again. That may be famous last words, but I don't think it will. I think this line now extends off for all of eternity to never be reached again, because it's going up at a pretty decent slope. So we break this, we form what appears to be a bearish rising wedge. Now I'm going to zip in to a 30-minute chart. By the way, that rising wedge had an apex right at about 1596. You know what I'm going to say? It's funny how often when we see one of these little constricting patterns, the apex of that pattern ends up having some technical significance. And in this case, at a minimum, that is where we formed this little short-term top. My feeling now is that with the second break of this bottom line, this line will probably now serve as some resistance. Now, that could be a case of, quote, famous last words, because I'll be honest with you, when it comes to estimating the bullishness of the past few months, I have pretty consistently underestimated the bullishness of this market. The good news is the chart has not fooled us. We're still looking at this line as a clear signal that the trend is broken, and we haven't seen that yet. So despite my little surprises here and there of, wow, man, the market just went up more than I thought it would, despite that, the chart is working beautifully. So right now, I'm thinking this 1596 area, that may be real tough to get up to again. And if we tag this line and then turn over once more, I would suspect pretty strongly that that would be the time at which this yellow line then breaks. But until it has, it hasn't. So, hang with it. Let's see what happens in the short term. We are heading up towards the top of this little orange channel, this descending channel, having reversed down here at our longer term support line, and it would not surprise me one bit if this also takes us over this top line to make another run. But I believe this blue line, or either one of these blue lines, I think they're going to be difficult to overcome. But like I said, I'm going to back off of that statement just a bit. Let's just go with this line right here, because I see the market coming up here and then sliding back down. That could be famous last words. So let's just watch this line. I think this is the one that really tells the story. Hang with your long positions until this busts, and even when it does, we then decide whether or not it's worth looking for signs of a decent tradable bottom, or whether we may be encountering a more significant top than what we've seen in a while. So guys, I believe that's about got it for today. I want to thank you for watching the video. I want to thank you for your support, and let's see what the market brings us tomorrow. Take care, everyone.